America, good afternoon from Germany. This is Pascal speaking, and we are on Thursday. The week is going to its end, but we have again major news today. Yesterday we had the Fed interest rate hike by 50 basis points. Today we had Bank of England interest rate hike with 50 basis points, and right in this minute we have interest rate hike of ECB, also 50 basis points today. So let's hop into the news and see what's happening today. Today we have news. ECB just announced the interest rate decision, 2.5% as expected, nothing special. Let's just see what the movement of Euro USD is. Major forex pair, we see that the Euro is gaining a little bit traction, US dollar is weakening because now we have more interest in Eurozone, and the spread between US dollar and Euro is a little bit smaller in terms of interest. In about 15 minutes we will have retail sales and initial jobless claims like every week, and Philadelphia Fed Manufacturing Index. Yeah, these are major news which can cause some movement in the market. We have the press conference of ECB in about 30 minutes. So not interesting for the American market, but maybe for some forex traders here. And tomorrow are no major news, but tomorrow we will have quadruple witching day. So a lot of derivative products like futures and options are expiring, and therefore we can also have some more volatility. Let's hop right into the market before the news come out. So let's have a look on VIX. We see that on the news from Tuesday and yesterday, Wednesday, the VIX went down big. Tuesday and yesterday, Wednesday, we see here, we went down big to levels in the lows of 21. Today we're a little bit higher at 21.50, but you see that the fear was coming out of the market. But indices went down, and we see these here. Nasdaq went down yesterday on the interest rate decision of Federal Reserve. We had a little bit of a pullback here, you see, during the press conference while Jerome Powell was speaking. Almost, I would say 90% reversal. No, we didn't reach the highs of the day again. Then we were trading sideways and went lower during European session. We are now trading sideways at the 11,600 level. And now waiting for the major news. We are a little bit below the lows of yesterday, and these lines here from Fibonacci, you still see these are the same. We have drawn them on a Wednesday morning, so your morning, my afternoon, but you see that this was the high point here from December 13th and the low point here from December 7th. These are my Fibonacci levels I used for yesterday's trading day, and you see how good they worked. So if you would have entered here, we talked about this in my previous live stream, to enter at these two levels here, 61.8 and 76.4% Fibonacci retracements. If you would have entered here, you would have gotten a chance for a smaller long trade here, and this one was almost on point. You see, just 1 point lower was Fibonacci level, and the low point was here 11,611, and this was the low point yesterday during the speech of Jerome Powell, and there I was taking a long position, not right at the lows here, but 11,625 was my entry point. So almost at the low I was able to take on a long trade and to ride this rally to the upside. So a nice trade, but only a small one, and I'm still in my long trade for my swing trade on the March expiry. This is December expiry. This one will expire tomorrow, but if you want to take on a swing trade or hold for a longer time, then you should take on trades in March expiry. And yeah, we are moving down right now. We still have 10 minutes left until the news come out. Let's see if they can make a change of direction and bring the market up again. Let's go back to a day chart again to see. We are now at the major levels here, so the next level would be the lows again to retest the 11,500 level, or the lows of December 7th here at 11,423 points. Let's see, I'm still bullish, but yeah, we can see major movements today and tomorrow, so a lot of things can happen, and you see how fast the market can move, like we have seen on Tuesday on CPI day, and the same thing can happen today or tomorrow, so we have to prepare for everything, but we are still in a sideways trading phase overall. What else do we have? Tesla, Musk sold a lot of shares, more than, what was it, 2 or 3 billion. Yeah, that was no wonder. We were talking about this in the last days, the weakness of Tesla, and you see there was a huge selling amount and a huge amount of shares traded in the last trading days. And yeah, now we had the announcement this night that Elon Musk sold shares again. He probably had to, because he needed the money for financing Twitter, and yeah, this 44 billion deal wasn't cheap for him, even if he was the richest person of the world. Now he is not. He is the second richest one, but he has still enough billions to be secure. But for the Tesla shareholders, it's not so funny, because Tesla lost a lot this year, more than 50% down this year, and especially during the last 3 months in this quarter, Tesla lost a lot compared to Nasdaq, and it's still weak overall, down pre-market 2.5% today. Let's see if Tesla can find a bottom here at $150, but my price target is still in place, $125. This would be the bottom here on a monthly chart, and I'm waiting for this level to come. I will not take on any long trade or writing short puts in options market before this level is reached. So yeah, maybe there will be some more shareholders in fear selling their stocks, because I have seen a lot people entering during this downfall here between 300 and 200, and now they are just sitting on their hands for not selling, but they have not so much fun to look at their stock portfolio anymore, because a lot of people have a huge chunk of Tesla shares in their portfolio. Yeah, let's have a look at the market again with the economic news. So what to expect for today? Core retail sales, we want to have lower numbers than expected. Then this should cause the market rise. With initial jobless claims, it's the opposite. We want to have higher numbers than expected, because Jerome Powell talked a lot yesterday about a weaker job market, what he wants to see, but it is still strong. We have yeah, it's working at almost full capacity, and companies have difficulties to get the people hired they want to. And yeah, that's a problem for economy, because now we have higher interest rates, which put pressure on the companies, and normally they should lay down their staff, their people, their workers, but they don't do it because they have fear that they are not able to get them back when it's getting better with economy. It was the same thing during COVID, because a lot of people were laid off their jobs, and later the companies had problems to regain them when everything went back up again, and that's a big problem. And therefore they are sitting on their hands like the traders, and are waiting for better days to come, and don't want to lay off their staff, but that costs money, and that's a problem for the economy and a problem for inflation, because the Federal Reserve wants to see some layoffs and to have less risk of inflation when there are more jobless claims, and especially less high wages. So the rates of wage climbing should be slower or lower. This is what Jerome Powell wants to see, and he talked a lot about this yesterday. Philadelphia Fed Manufacturing Index is the same. We want to have lower numbers than expected. The expectation is already -10, but it is higher than previous number with -19.4. So yeah, let's see. These are major news today. Retail sales, initial jobless claims, Philadelphia Fed Manufacturing Index. You see 3-star events are the major events. And yeah, retail sales, the same here, like core retail sales. So these numbers are both important here. You see the expectation is already a slowdown in retail sales. So let's see if this number can go lower. I don't think, though, it will be difficult, but yeah, my expectation was not the best on Tuesday with inflation, and therefore with consumer inflation, and therefore I can be wrong the same time again, so I will just wait for the outcome of the news and then trade direction and not my expectation of the outcome. But yeah, it will be more difficult to beat or to be lower than the expectation here, because it is already low. You see the last number was 1.3%, and this is a big slowdown. This is what Federal Reserve wants to see, to lower inflation, but it is difficult to be even lower than the expectation, and therefore it will be difficult to see rising prices today. But we don't give up, because everything can happen on the stock market. And yeah, that's what we should prepare for. So let's see where are the lower levels, just to be prepared for these. We have still our Fibonacci levels in place. Of course, you could redraw them, but I will just keep them. You could also use this low level here for your Fibonacci levels, but I will just draw normal lines as support levels here at this area here. This is about 11,530. And of course, the 11,500 psychological level will also be an important level. Therefore, I will draw here a second line, just that we see this will be a supporting area here in between. And if we fall down, I will probably take on some more longs in my swing trade for the next 2 or 3 weeks in March expiry. And again, at the lows, we will probably see some supporting levels here. On the upside, we have the next Fibonacci level here. You see this was a closing of hourly candles yesterday, so this is an important level, and it was a low point the day before yesterday, so this is an important level on the upside here, 11,726. And here we have the 50% Fibonacci. You see the low points of yesterday pre-market were here, and the high points were almost at this level of Fibonacci, 11,917. High point was 11,948 yesterday. And yeah, this should also be an area of risk, because we have already retested them a lot of times in the past, as you can see here. So I don't want to have too low levels, because then it will take more time to go to the upside without any major news around Christmas and New Year. Okay, we are prepared with the levels here. We have 2 minutes left, so let's talk some words about yesterday, the interest rate hike, and the next Federal Reserve meeting. You can mark a circle in your calendar, will be February 1st, so we have 1.5 months left to the next meeting, and the expectation is again a slowdown. We had 50 basis points this time, and next time we will probably see again a slowdown in interest rate hikes, because the expectation is only 25 basis points. As you can see here, we are at 4.5% now, and 4.75% is the expectation of 73% of market participants. Only 27% expect 50 basis points rate hike, and probably at March we will be at the high point around 5%. So 5 or 5.25% should be the high point between February and March. So we will see if this is the case in the first quarter next year. Yeah, we will go back to our news and to the chart, and then talk later about the rest. So we have more to come, but at first let's see here on the 1 minute chart, just to see everything and to be prepared for the movement in about 1 minute when all the news here come out. We have 10 seconds left. Oh, really calm today. Everyone waiting. And news should be out now. Ooh, lot worse than expected. Empire State Manufacturing Index is -11 and expectation was -1. Initial jobless claims are lower than expected, but it's a weekly number, okay. Core retail sales, lower than expected, not bad. And retail sales a lot lower than expected. This should cause a big gain in the market. Nice to see, because I still have some long positions. And yeah, that's good. That's good. That's what I want to see. And we retested 11,600 level, the Fibonacci level here, you see. So let's see if we can hold these, and the bulls can take on more long positions here. So probably we won't retest the low levels to re-enter more on my long position, but yeah, you never know. Maybe to the market open we will have a pullback. Let's see if we can manage to go above this Fibonacci level here and then above volume weighted average price here. We are still 1 hour before the market is open, so volume is a little bit low. We will have to wait for market open, but for now the numbers are looking good, just not initial jobless claims. But yeah, I don't worry a lot about initial jobless claims because it's a weekly number and we can see the changes every week. But like Jerome Powell said, the number is still strong. Job market is strong. That's not what the Federal Reserve wants to see, but the problem is they cannot influence the job market with their interest rate decision, and therefore they have to wait for the companies to lay off their stuff. That's the thing. But here we see worse than expected numbers from the economy, and that's what the Federal Reserve wants to see, because this will cause a slowdown in inflation risk and therefore a slowdown in interest rate hikes. Okay, interesting to see. Let's let the market do its work. We are still below moving averages here, but we are working on coming back. Let's see if we can hold the levels here and go to higher levels, or if we want to go to the downside, even if the news are good for the market, we can turn to the downside. So it's still in the favor of the bears. The news are not, but the technical levels are. We are below moving averages, below VWAP. We have had the rejection here, so it is still weak. But maybe we will have to wait 1 hour for market open to see the real direction. Okay, the first question in the chat. Me too, just joined. Have you sold your long Nasdaq? It's dropped a lot after hitting 12k plus. Yeah, I sold the December expiries on the 12,200 level here. So I have sold here my December expiries, but I re-entered some March expiries yesterday here at this level and this level, and I want to take on more at 11,500. But this is a swing trade, so I won't sell it the same day. I just want to enter on different levels, and if we manage to come back here, I will enter some more on my swing long trade with March expiry. But for now, I have not entered any position today, and I'm still waiting for the market to drop further and for every bull to be in fear and to cut losses, and then the market can turn around. Yeah, you see these are major low levels, so this should be a good supporting area here. Let's see if we can manage to go back to this level to enter my long position. But for now, bulls and bears are still fighting here around this level, and yeah, it's just 1 hour pre-market, so not a lot of volume right now. Okay, we have time to talk about the other things with Federal Reserve. We already talked about the possible next interest rate hike in February and March, and there's one other thing which is interesting, the Fed dots. So let's see, if you open here the PDF file on federalreserve.gov, you will get the decision again, and if you scroll down, this was also shown during the press conference. So this is called the Fed dots, because every board member is making a projection on the interest rate level for next year, the year after the next year, so 2024, 2025, and the longer rate. So you see this projection. We haven't seen this the last time because they only renew it every second meeting, and therefore we see it today or yesterday. And yeah, we see for 2023 that they have hired their expectations. This is what the market already expected. We have seen this in FedWatch tool, but for the Federal Reserve Board, there was no showings last month, and therefore we had to wait until yesterday to see the higher expectations. So they have hired the expectation for next year's interest rates from meeting to meeting, and yeah, now they have an expectation of about 5 to 5.25%. You see, this is the area where the most dots are. We have 19 dots here in total. and 17 dots are above the 5% level. Maybe I can do it a little bit bigger for you here. So yeah, probably we will see a high point here at the 5 or 5.25% area next year. And you see that the expectation for the next years, 2024 and 2025, is already dropping. So around 4% for 2024 and around 3% for 2025. But as Jerome Powell said yesterday, the expectations can change from meeting to meeting because of the news. And if the inflation is coming down, then also the interest rate expectations can come down lower. But if inflation stays high, then probably we will see higher expectations. But as we have seen, it will take time to bring down the inflation. So these are the inflation expectations for the next 3 years, and we see it takes almost 3 years to bring down inflation back to the 2% level where Federal Reserve wants it to have. And yeah, that's a difficulty. It's easy to spend money and to bring money in the system, but to get it out again, it's more difficult to bring down inflation, and that's what takes time. And therefore we will have higher interest rates than expected for a longer time. Yeah, maybe not at the end of the year. Next year we will probably see again lower rates. We won't stay as high as 5% or higher for the whole year 2023. A lot of journalists tried to ask this question to Jerome Powell, when will be the first lowering of interest rates, but Jerome Powell didn't want to talk about this topic. He was very hawkish and always saying, no, we don't plan to lower interest now, we are still rising interest rates. And yeah, so the market is expecting that the interest rate will be lower at the end of next year. So if we move back to December 2023, so in 1 year, you see the expectation is around 4%, 4 to 4.5%. So this is the most common expectation. So this will be around 75 to 100 basis points lower than what we see in Fed dots. But yeah, this is the high point here, and the low point at the end of the year can be here at the 4% level, what Fed board members are expecting for 2024. Markets are dropping. Maybe I will get in my long trade, so I will get a chance. Nice to see, and then we will see what happens when market opens. So I will enter my order now here for entering March expiry in a micro Nasdaq and a bigger Nasdaq NQ future. Let's see if I manage to enter. So I will have to add 110 points because the March expiry is trading at higher levels than the December expiry. So we will see here 11,550, but the March expiry is at 11,660, so about 110 points higher than December expiry. So this is the 11,530 level, and if we are trading right below, then I will take my first trade here. Let's see. I just enter my trade here, 11,640 about this level. Day order. And one larger Nasdaq order I will enter here. NQ order, also in March expiry. And the same entry level here. Maybe a little bit lower, just by some points. And this one here. Okay, prepared for this. My orders are in place, and as soon as we reach the low points here or the supporting area, I will be long. And yeah, I try to trade against the main trend. Of course, it's risky, but it is still in case of the overall trend. So we are trading sideways, but I still think that as long as we are making higher lows and maybe higher highs, like the last time here, this was a higher high. So we can still have the breakout on the upside in the next 3 or 4 weeks. And that's what I'm trading. And as soon as we go lower than this level here, 11,380, I will be out of the trade. I will be stop lossed out. So I have a lot of margin to the upside, but a small amount of to the downside where I will lose money. But my targets are still the last high points. And if we go to higher levels, 12,500 and 13,000 points are my targets for the March expiry. So we can still see a rally in the new year, maybe in the first 1 or 2 weeks, and then my target levels will be 12,500 and 13,000 points. You have seen how fast the market can move last Tuesday on CPI, and therefore I'm still confident that we can see a change of direction in the next days or weeks to the upside, but you have to be patient to enter your trades at a good level to have a good risk to reward ratio, and that's what I'm doing right now. Okay, let's see if you have questions. What are your thoughts for Apple? Yeah, Apple is the biggest player in Nasdaq, so therefore you can just trade Apple like Nasdaq. So if you want to trade Nasdaq long, then you could take on an Apple long because it's almost the same. Just open here an Apple chart for you. Where is it? Here. We will first see it on a day chart. You see we're still trading sideways. We are in this area here. We already talked about this last week, I think. And we need the breakout to the downside or to the upside to see new interesting levels. For now, it's just trading sideways. And the interesting thing maybe is that we are going in a thing like a triangle here. So it's getting smaller, the movements, and we will probably see soon the breakout in the next 1 or 2 weeks to the up or to the downside. And then we will see a decision with even more movement. Next target would be retest of the lows here or retest of the high point here. That's why we drew the Fibonacci levels. And yeah, we were just waiting for the levels to come. I wouldn't take on a trade right now in Apple, but I'm already long in Nasdaq, and Apple is about, I think, 12 or 13% in Nasdaq, and therefore it's the biggest part of Nasdaq here when you trade Apple. Let's go to crude oil and natural gas. Crude oil, we see almost the $78 level. We talked about this yesterday. $77.75 was the high point yesterday. $77.77 was the high point today, but the trading day is just about to begin. We are almost flat today. We went a little bit lower, but we still have some room to the $78 level. Let's see if we can hit it. The last time we had the high here at $77.88, so just 10 cents higher than this level here. Let's see if we can hit the $78 level or not. I'm still in my short put trade, so 59 strike put, and it's almost at my target level. I'm 78% in the green. I want to have 80%, so only 2 cents are missing for my buyback of the option. And yeah, it's a smaller trade. I will make about 750 or 800 bucks. But yeah, I want to close it this week, and hope that we can reach it today or tomorrow, and then I'm out of this position. That's the only position I have in crude oil right now. No future position. The same with natural gas. Let's move on to natural gas. We had big movements in the last days, as you can see here. These were about 7 to 8% days here to the upside, to the downside, to the upside, then downside again yesterday. And you see the Fibonacci levels are really good in place here, because we had the high points and the low points or closings of the days at the Fibonacci levels. Today we are trading around this level again, almost unchanged like crude oil, waiting for direction. I have no future trades in place in natural gas right now, but I still have my short strangle, a 14.5 US dollar strike short call, and a $3.70 short put. So time is in my favor as time is running, and volatility is coming down. This is good for my position. And let's look at the volatility chart. So we see volatility is coming down the last days. As the prices are coming down, then volatility is coming down, and that's really good for my position. So I gained with the short put and with the short call, even when the prices were coming down here in natural gas. I'm now 70% in the green for my short put and 40% in the green with my short call, and I'm just sitting and waiting and being patient, and that's what I do most of the time as an option seller. Time is in my favor, and I'm shorting Vega, I'm shorting volatility. So when fear is coming down and I'm in a position, that's good for me. Yeah, and what else do we see? We see that the sugar went to new highs here. So we had movement above the last highs here. So I went out of my short position, but I want to retake a new one. Maybe this is just a false breakout here, just to trigger some stop losses. So I tried to re-enter with some shorts here, but I'm out as soon as we move to higher highs. But yeah, this was a big weekly candle here. Let's see it on a day chart, and you see yesterday was a big green candle and today again. So we had the breakout above the last highs. Let's see if we can manage to hold these levels, or if we close below the last high, then this would be bearish again. And yeah, I was still able to go bigger in this position to profit from a downfall. Again, we had a long sideways trading phase. We didn't come back as much as I expected, because I thought we will pull back to the last highs here. We didn't do this. We just pulled the back up at the 0.19 level. But yeah, I still made some money, just a couple of bucks, and I'm waiting for a new entry here. Let's go to orange juice. Orange juice, I'm still watching this chart. Here it's down a little bit today, 0.8% down today. But on a day chart we still see there's a lot of room to the downside, but I'm waiting for a little bit higher levels for a better entry to short orange juice, because I missed it here on the first day with this big down movement of 4%. Back to Nasdaq. Nasdaq is now, yeah, only 20 points above my entry level. Still waiting. Just being patient. We still have 45 minutes until the market opens. So back to your questions. What are your thoughts on Amazon? Yeah, Amazon is also a big player. I think they had a good Black Friday, good Black Friday sales, but that doesn't have to say a lot. So let's use this Apple chart to bring up Amazon. All the Nasdaq stocks are moving the same or almost the same. So Amazon was a little bit better with a breakout here. Yesterday you see there was a big movement to the upside, but we had again lower highs here. So it's still in a downtrend, and we almost went back within this sideways range here. You see the pre-market prices. I will just bring up these that we can see them. We are back in the sideways trading range, and therefore I wouldn't take on a long trade. And maybe we will retest the lows here. Let's see if we get back to $88. This should be better or good support level. If we break this level and we close below, then I see more short potential. Yeah, below these levels there will be probably more sell-offs. So let's hope that a big part of Nasdaq like Amazon can stand and can make higher highs again, but we need a breakout above the last highs, above $96 and above $97. So these are the last two highs. We need a breakout above these levels to be more bullish again, and then the next target would be $104 or here $105. So these are the next targets. This is the next resistance area at these two high points. You could also draw a Fibonacci reversal here. So if you want, just use the last high point here, then you see the levels, and I would use the last higher high here at this level of $103.79. So then you see a little bit better the target points on the upside. So you see the first target here as the last high point, and the next target would be the psychological 100 level, also an important one, and then the previous high at $103.79. So these are the Fibonacci levels for Amazon, but to the downside we only have the previous low, so not a lot of room to the downside. Therefore I wouldn't trade it short and wait for a breakout, for a clear breakout and a closing of the day below this level, and then you could take on a short trade if you want to short Amazon. Yeah, no financial advice here, only entertainment purposes as always. You know, my streams I don't make money on, it's just for entertainment purposes for you guys. On sugar, what price are you looking to enter sugar short or long? I already entered sugar short at the price of, let me just show which price level I entered. It was 0.257. So let's draw this in our chart. So here's the chart. 25.7. Let's just go to a 5-minute chart today, then we can draw a line here. 25.7. Where was it? Here. Here I did enter with my short trade, but only a small one with 2 contracts short. I still want to have more, but I want to see that this is a false breaker to the upside, and then I can short more. If we go to higher highs, I will be out of this trade, so I will lose only small, but I have more room to the downside, more potential to make money here. So I'm in with about 2 contracts, but I'm ready to go with more contracts. I want to have at least 5 contracts if we are trading back to the downside again. Okay. Will you trade options on direction on sugar? No, I don't trade sugar options because the volume is not really good in sugar options, and they are not really liquid. Even the futures are not really liquid. As you can see, there are not traded a lot of contracts here. You see, then we have not a lot of trading volume in sugar. It's okay, but it's not really big like crude oil or natural gas, and therefore I rather like to trade here directional on sugar and not the option. Okay, Rocket joined late. Do you close your long position on Nasdaq? No, just go back in the stream and rewatch it. I won't close. I will go in bigger with my swing trade on Nasdaq when we hit. We are almost there. I want to see these levels. Come on, go a little bit lower. Go on a higher time frame, then we can see it a little bit better. So the previous lows here were at 11,516, and here was the low 11,531. So we were at this level. 11,531 was the low point. Already went back 10 points. This was the scalper. We talked about the scalpers, and yeah, this was the 10-point movement from the scalpers. They went in long here. They will close out now, so more room now to go back in this area, and I hope we do so I can enter my long. I don't hope we will turn right here and I will miss to enter. Yeah, but if you miss a trade, never mind, because never get in FOMO. Even on a swing trade, you can re-enter on at a later time, even on higher time frames, when you see that you have more confirmation here, because there's no confirmation. I'm trading against the trend. It's risky. Only take on a small part of my position and go in bigger if we see confirmation. But I want to trade at these low points here because I think they could act as a supporting area. The initial jobless claims came in much better than expected, while the retail sales came in worse. It's tricky because of mixed data set, but you mentioned the market might rally. Yeah, because the initial jobless claims are a weekly number, so it's not really important because we see them every week. So we will see the next change next week. So you see, we can have a really good data set here because we see the changes every week. You see? Every week of December we had the initial jobless claims, but the other data are monthly data, so therefore we have to wait 1 more month to have new data for Philadelphia Fed Manufacturing Index and core retail sales. So these are monthly numbers, and therefore they are more important in my opinion, because I don't think that we will see a big change in initial jobless claims until mid or end of January. It takes time until the interest rate hikes will take action into the economy, and the last number which will change is job numbers. So the first we will see inflation and then we will see jobs. So this is the last number to change. And therefore the Federal Reserve just has to be patient and has to wait for the actions to be seen in the job market and in the economy. It takes time. It takes time. And even the last interest rate hikes by 75 basis points are not fully in the economy. We have to wait 3 to 6 months to see the full effect. And therefore, I think that we will see lower price levels in the first quarter next year, because I don't think that we will see a soft landing like Jerome Powell is expecting. The economy will be worse than expected, and therefore I think we will see this at the stock exchanges in the first quarter, because the stock exchanges are in advance by 6 to 9 months. So what we will see at the mid of 2023 is a worse economy. And this will be taken into account in the stock exchanges in the first quarter, because we will be in advance at the stock exchanges and we will see this. But for now, I'm still expecting to have a Christmas rally. Oh no, I missed it by that's damn. Sometimes really it's really, really bitter because by 1 point. Is this crazy again? Yeah, but we still have time, 35 minutes to market open, so we can still see a pushback in this area as long as we are not above the 20 EMA line. So being patient, not getting in FOMO. I already have some longs, so I won't lose anything just by not being in a bigger position. But sometimes it's if you do a good analysis and then you don't hit your limit to enter just because you want to trade in the area, not right at the area. Yeah, that's it sometimes. Yeah, okay, that's about the job market. We will have to wait for higher numbers, and this will take time. I think 4 to 6 weeks, and then we will see higher than forecasted numbers, but it will take time. And you see the expectation was already higher. We had the last weeks we had expectations of 235 and 230k, and it was a higher expectation than in the previous month, November. So expectation was higher, but we came in lower. Last week we were just in line with the expectation, and yeah, that's why it's not moving the market a lot. But we will have to wait for January, then we will see major movements because of initial jobless claims, but not for now. Back to the interest rate decision. So we were talking about the Fed dots here, and yeah, we will probably see lower interest rates at the end of the year. That's what the market is expecting. And another thing, Tesla. So Elon Musk sold a huge chunk of Tesla shares, 3.6 billion. So he already sold about 22 million shares. Crazy. It's a big amount, and that's what we have seen in the volume. So yeah, he sold 94 million shares of an average price of $243. Yeah, and he was always talking about, yeah, it has ended. He has sold all shares he wanted to sell. But yeah, it's complex because his debt is secured with Tesla shares. And as long as Tesla is falling and the market value is going down, then he has less securities for his debt burden for Twitter, and therefore the banks can force him to sell shares. We don't know why he sold shares exactly, but probably he had to sell shares to have the better securitization of his debt burden for Twitter, and because cash is the best to secure your debt, but the shares can only maybe lend up to 20-25%. I don't know the exact level, but let's see Tesla again, and yeah, you see how far it went back, and especially in the last days you see the pullbacks, and even today 2.4% red. So yeah, that's not good, and that's what Elon Musk was already talking about in the previous tweets. He was I will just bring up these tweets for you just to show. He was writing about this topic in the last days. Just one moment, I have these. Where is these? Here. I have had this here. Where is it? Was it on my smartphone or was it here? Yeah, maybe it was on my smartphone, but I can bring it up again. I have it here in Discord. Yeah, here's also something interesting for you. We see the largest losing periods of Tesla stock. So since inception, we see that Tesla lost 60.6% was the largest decline, and this year we already had 60.9%. 404 days in a row for this bear market in Tesla, but the largest one was 623 days between 2017 and 2019. So we still have about 200 days to go if we want to have the new record here in days. Yeah, I don't know if we have 200 more days to wait for the lows to come, but my target is still $125. And yeah, even if some people say, yeah, Tesla is so cheap now, price earnings is already at 30, so it's really low for Tesla. Yes, of course. But the cheap thing can always go cheaper. Therefore, I wouldn't trade in Tesla right now long. I would wait for the important technical levels to come. Back to the tweets of Elon Musk. Where did I post this? Did I post it somewhere here? No. Okay, I have it on my smartphone then, but I can bring it up maybe here. Musk. No, I don't have it here. Okay, I can't find it right now, but he was writing about this topic in the previous days. And yeah, I have posted it here. Just bring it here. And let's see it. Some photos. Where is it? Sometimes difficult. Let's bring up the price of Nasdaq for you while we are waiting for me to find this tweet again. It's always difficult when you post it at different in different groups and don't know anymore where you did post it. Was it in my own group? No, not here. I think it was here. Links. Share links here. Yeah, this was just the article, German article. Okay, now I'm not able to go to this here. Damn. Okay, I will bring it up next time when I find it again. I can just send it from my... no, market is rising. Crazy how good this level worked. But yeah, sometimes it's like this. Then you are not able to re-enter it. And that's it sometimes. Screenshots here. So I will just send it to myself as an email and then I can show it to you. Downloads. Here it is, yes. Okay, it was on my smartphone. Now I have it for you. That's the thing, if you do not prepare everything, you just do a live stream like this and then you can just bring up the news like this. Yeah, here it is. Perfect. So let's bring this up. As a Tesla investor, make sure you don't get distracted and are still able to distinguish between noise and signal. I have a feeling that many can't. Tesla. Think long term and avoid leverage. That's interesting because of leverage. Elon was financing this Twitter deal with leverage because he got money from the banks and he was depositing his Tesla shares, but they only accept 20 to 25% of the value of the Tesla shares and gave him the money, borrowed money, to buy Twitter. And therefore, when the value of Tesla shares are coming down, especially like this year or especially like the beginning of September, then he has less margin. So the bank will force him to deleverage his deal, and therefore he has to sell shares to have cash. And cash is a better security than a share, because cash won't move like the share is moving. And that's just the thing. And the same here. Here also tweeted here. At risk of stating obvious, beware of debt in turbulent macroeconomic conditions, especially when Fed keeps raising rates. Why? I don't know. for which rate he financed his Twitter deal, but if he didn't secured his interest rate, then it will be even more difficult to finance this with rising interest rates. And last year, Twitter had to pay, I think, 21 million in interest payments, but this year they will have to pay 1 billion in payments. That's just crazy. 1 billion, because all the debt burden is on Twitter now, and they will have to pay 1 billion in interest rate payments. And that's just crazy, because Twitter is not making money, so they are still losing money, and therefore time is running for Elon Musk to do. That's a big problem, because he wants to do it himself, so he is not hiring a new CEO. And that's what the Tesla share owners hate right now, because he's keeping so much time for Twitter and not caring about Tesla. And that's a big problem. That's why Tesla stock is dropping even faster. Okay. Thoughts on the US dollar. Is the Fed weighting it higher to slow inflation? The Federal Reserve doesn't take a look or a big look at the exchange rate, but for sure they don't want to have a too strong dollar, because that's a problem also, because then you will have higher inflation when you are able to finance everything with a strong dollar, but it can be a problem also for the economy. So yeah, it can be good, but it can also be worse. But Jerome Powell didn't talk about the exchange rate yesterday, but what we see now with the rate hike of European Central Bank is the rising of euro again and the weakening of US dollar. Maybe we will see a change of direction at the beginning or the end of next quarter, because then when we see a pullback in the stock prices, probably a lot of money will flow back into cash, into safe haven US dollar, and therefore this should cause US dollar to get stronger and euro to weaken again. But for now, it's euro gaining traction and the US dollar weakening. Yeah, it's not bad for inflation purposes, because then more people will buy outside when the US dollar is strong, because it's cheaper to buy in the euro area or somewhere else with a strong dollar. So this won't cause inflation within the country, but you can also import inflation, because when there's a lot of demand from the US dollar zone, then the prices will get higher here in the Eurozone, and this can cause an imported inflation also, like with the high commodity prices which are traded in US dollar. When the US dollar is high, like now, then we have an imported inflation here in the Eurozone, because we need crude oil, we need natural gas, and all these commodities are traded in US dollar. And therefore, when the US dollar prices are high compared to euro, then we have to take a lot of money in our hands to buy these commodities, and then it's an imported inflation, especially when the commodity prices are high and the US dollar is high, like now. So for Americans, it's easier, because they have just the US dollar. They don't care about the exchange rate. They can trade the commodities in their own currency, but for Europeans, it's different. 20 minutes left. Yeah, I don't know if we should wait for the market to open. Maybe we will close the live stream in the next 5 minutes. I will just go through the last questions of you. Agree that there won't be a soft landing. What would be some of the bear signs that you will look out for? So the biggest bear sign will be the job market. Yeah, we will have higher than expected initial jobless claims, and when we see the Fed pivoting in February, March, so when they are expecting the rates to come down again, then this will be a big bear sign. Because why should they bring down rates again? Only because they fear that there will be a harder than expected landing in economy. Because we have seen that inflation will not be down within the next 2 years. So interest rates should stay high, but they won't, because let's bring this up again. Here, where was it? Here. Because the inflation will stay high, so the interest rates have to stay high, but they will bring down interest rates when we see a little bit lower inflation rates, because it is a big risk for the economy to stay too long at too high levels. Because economy won't be able to do work with these high levels of interest rates. It's not possible. And you see, the longer run projection is 2.5%. So it's even lower than the projection for 2025 for the next 3 years here. And therefore, the Federal Reserve will bring down the interest rates, and that's why it will take a longer time to get back to 2% inflation rate level. Yeah, and that's just obvious that we won't be able to have a soft landing like this. Yeah, Jerome Powell can be happy that the labor market is still strong, but it's also causing some problems. There was even a journalist yesterday asking if Jerome Powell could go to Congress and ask for an immigration rule to get more workers into the US to have less problems on the labor market. Yeah, but just that's ridiculous. Jerome Powell is not a politician. He's a federal board member and the chairman, so he's not making politics. Yeah? He has to be independent from politics. But it was an interesting question because, yeah, it's one of the targets for Federal Reserve other than the European Central Bank. European Central Bank has no target for the job market, but the Federal Reserve has. So they want to have a good job market, and they fulfilled this target. But the problem is now they want to weaken the job market to have less inflation risk, and that's a big problem because you cannot influence this just with the interest rate level. It takes a lot of time for the companies to lay off staff, and therefore they have to wait. And especially now, because you have not as many skilled workers, so the economy needs a lot of skilled workers like IT guys and so on, and these are missing in the US, and that's a big problem because then the companies cannot grow as they want to, and they don't want to lay off their skilled personnel because they will have problems to get them back in business when the economy is gaining traction again. Yeah, because everyone knows this now after COVID, because they laid off a lot of stuff and now they are not able to get them back, not at the previous price level, the previous wage levels, so they have to pay higher wages. And that's also the problem for Federal Reserve, the wage rising. Yeah, they want to have lower wages, or at least not a big growth in wage rates. Thoughts on Rivian? Rivian, yeah, Amazon has a big stake in Rivian. Let's look at Rivian. Also an electric car maker, Rivian here. Missed the eye. Yeah, looking like Tesla a little bit. All electric car makers were going down, and we see a lot of moving down here. Lower highs, lower lows. Next important level is the last low. Oh, we are already below the lows of July, so the next level is around here. I think it's an area here. We should be here in this area will be the next target level to the downside, between 18 and 22, the lows of May. Yeah, it's not looking good for all the electric car makers right now. They have big problems because of a weakening of the economy and the less demand. The same problems that Tesla also have. And we see these were the lowest lows since the IPO of Rivian. But probably we will see a retest in this area. It's a broad area, of course, but it can be interesting, especially for option traders, because let's see the implied volatility here. Implied volatility is low right now, so it can be interesting to trade a long put to come back into this area, and then we will probably see higher implied volatility, and you could try to change direction with a short put at the lower levels at 15 or $12 strike, and you could use the higher implied volatility then for a bounce in this area here, because we will probably see a bounce in this area. Yeah, let's see and wait, but for now we are trading lower than the last lows here, and this is not a good sign. It's a big bearish sign here for Rivian. Yeah, still trading below 9 EMA, making lower highs, maybe we will see a retest at the open. That's what I'm waiting for to enter my long trade, and then after maybe 5 or 10 minutes we could see some bulls coming in and dip buyers buying up the prices again. That's what I want to see. Yeah, guys, just ask some question. We have some time, so I will do the opening, maybe 5 or 10 minutes after the opening. So let's stream for 20 or 25 more minutes, and then we will see the opening and what happens. So I want to show you that I'm entering my long position here. I hope the levels will come and will hold. That's more important, not only come but also hold. But let's see and do this together and watch the levels together to come. Let's see, VIX today is rising a little bit, but you see almost no movement. So there's no big fear of further drop of the market. It's just trading sideways from yesterday's levels. So that's why I don't think that we will see lower levels. And the same with Euro USD. Of course, we have the interest rate hike from ECB today. But as long as US dollar is weakening, money is going out of a safe haven US dollar and flowing into the market. And that's what we see right now. So we have new highs at 107, and therefore this should cause markets to stabilize and to go higher. So from VIX and from the weakening of US dollar, we should see stronger market. But maybe at the opening we will just go back to the main support area and then see the market rising again. I hope so, because I want to enter my long trades here. So the natural gas just completed gap fill and double bottom. Yeah, we already talked about natural gas, so no major movement today. Oh, we already went up 2.6%. Nice. Okay, there was almost no movement when we first talked about natural gas, so we went up a lot now. Yeah, it's looking bullish right now, but we are still in this sideways trading phase. So we retested the lows from yesterday, and we are still on a day chart. We are still in the sideways trading phase here, you see, between these two Fibonacci levels. So we are waiting for the breakout. I wouldn't trade it right in here. I would wait for the breakout to the downside or to the upside above the $7 level or below the lows of yesterday, below $6.33. And then I would trade it to the short side or to the long side. But I'm not planning to take on a directional trade in natural gas futures. I still have my my option trades here, my short strangle, and yeah, time here is in my favor, and I will just sit and wait and watch it. And yeah, it's good that it's moving sideways. This is what I want to see, not to have too high rise or going too low, just going sideways. This is the best for me. And when implied volatility isn't rising too high, this is also good for my position here. What else do we have? Do we have something interesting here? No, nothing here. Rising again. 10 minutes left until market open. Yeah, sometimes it's really boring, like watching paint dry, if nothing major happens and if you're not in a position. But that shouldn't force you to do anything and to rush into a position. Just do your due diligence and keep your levels and stick to that, and don't FOMO of a trade or something like this, and we'll just be in a worse position if you could go too late into a position or to a trend. Of course, for a swing trade you could still enter here because it's just 30-40 points above the entry level, but I want to see the retest on the opening, to see some sell-offs. So the last ones will be out of their long positions and stop losses will be triggered, and then some dip buyers will probably come in and buy up again. That's what I want to see here, because news were good today. Yeah, let's see if we have some news for the next weeks. So Christmas is next week, but let's see, we are still trading the full week next week. So nothing important on Monday, but Tuesday we will have building permits. Also an interesting number. You see again the slowdown. So building permits forecasted lower than last month, but we need lower than expected numbers for the markets to go higher. This is on Tuesday, 1 hour before the market opens. And on Wednesday, we will have consumer confidence at 10 a.m., so 1 hour after the market opens. The forecast is 100 points, previous level was 100.2, so we will need lower than expected numbers for the market to rise. So bad news are good news for the stock market, again, because of inflation risk. And existing home sales, the same. We see a slowdown, so the expectation is lower than last month, but we need lower than expected numbers for the market to rise on Wednesday. On Thursday, we will have GDP data 1 hour before the market opens. And on Friday, we have core durable goods 1 hour before the market opens. So enough news before the holidays. And therefore, don't give up too early if you are a bull and in a bull position. For this year, we can still see some higher levels this year. Just wait for the levels to come. 11,570. Still trading sideways. 10 minutes to go to the opening. Do you have a platform where you post your options and stock positions? No, I'm not a signal service. I do not post my trades when I enter them or close them. I just talk about them when I'm live here, but I don't want that someone is trading after me. Make your own decisions and take your own due diligence. That's important for you, for your trading. I'm not a signal service. I don't want to be used as a signal service. Everyone can do trading decisions on their own. Okay. Eight more minutes. What shall we do in these 8 minutes? Go back to crude oil. It's moving back a little bit. So sometimes it's like the opposite from natural gas. When natural gas is rising, crude oil is sometimes falling. It's coming back again here. I still want to see the $78 level. But if we don't see it, it's not a big problem because I have theta decay. So time is in my favor. Every day that is passing by, I will make money just by nothing happening. That's the interesting thing when selling options. And I have sold 59 strike put. Therefore, even when the prices are coming down in crude oil, I can make money with the option because option premium will go down with lower implied volatility and with every time going by. What else do we have? Interesting. Euro USD is still rising. Seems to be a little bit slower now. Maybe we'll see a high point here, waiting for the first red 5-minute candle. But for now it's still rising to the upside. Six minutes to go. Let's see some other questions here. Nothing major here. So how was your trading year overall? Are you in the green? Or when did you start trading? Did you start this year? Or are you already long in trading? Just write in the live chat. Then we can have a discussion about this. Because my trading year 2022 was really good. Pretty good. I have one larger account there where I made more than 100% plus. That's really good for me, the year 2022. I traded a lot of directional trades in futures also, but also I made a big money with option trades because there was a lot of volatility, and when there is a lot of implied volatility in options, you will make more option premium. And that's also interesting for an option trader if you are in the right position at the right time. Thoughts on Baba, Alibaba. Okay, the Chinese one. Let's go to the Chinese one. Baba, the Amazon of China. Yeah, Chinese stocks are weak. Oh, it's really weak. We went already down from the highs. 70% down from the highs. Wow, crazy. It's still interesting for a long-term portfolio. We are rising higher since the beginning of November, but it's still lower highs, so we are still in this downtrend. And before we are not closing the months above the 100 level, the psychological 100, I don't see that we are reversing this downward trend. We have to go above the last highs here at $120, and we shouldn't do lower lows here below the $60 level, or the last low was $58. So it's all 30%. But if you entered here, would already be 55% in the green, not bad, or 50% in the green, not bad. Yeah, but who catches the low point? Yeah, it's difficult, and even the low point can then later be a lower low point. Yeah, that's difficult. I would wait. Don't be the first one to try to catch the bottom. If you want to trade it to the long side, wait for a clear direction, a clear trend to the upside. We haven't seen a clear bottom yet, and it's even not trading sideways. So wait for higher highs above $120 and not rush into a trade too early. So because you have still room to the upside. If we trade above 120, we can still go back to $180, $200. So you have a lot of room to the upside if you just trade until the previous highs here. This is 43% upside potential. Yeah, I don't do these here and say, yeah, you have 150% upside potential to the previous high points. Yeah, you could also do this at Rivian and other stocks, but yeah, maybe you will have to wait for 5 or 10 years to see the high points again. Maybe we'll never see them again. You don't know, because there was a lot of cheap money in the market in the last 2 years, and that was a big problem, because yeah, you see how the stock market moved. It rallied big, and now it just goes down big because money is pulled out of the market by the Federal Reserve, and that's what we see right now. So we have to wait for the market to settle, to build a stage 2 of a reversal. This could be stage 2 here, sideways trading phase, and then we want to see confirmation phase in stage 3, but therefore we have to go above this $120, $125 level to see a clear breakout to the upside, yeah? And to be out of this downward trend here. 2 minutes until the market opens. Okay, Vero just started trading this year in about September. Oh, okay, just this quarter. Interesting, because yeah, last quarter was good at the stock market, so we were rising. You see here in Baba, or just trading sideways with Nasdaq. Depends on which stocks or which market you were trading. But you can make money in every market, even in sideways market or in dropping market. You can make money by shorting. That's interesting. Because most people think you can only make money when the markets are rising, but yeah, no, you can make money in every market, even in sideways markets. Just paper trading sporadically in February and March of this year. Yeah, sometimes it's good just to paper trade, especially when you are not sure of the direction and you don't want to risk too much. Then just paper trade and wait for your levels to come or for clear direction, and don't rush into a trade. 1 minute left. It's definitely been a crazy time to start trading, because it's been such a crazy market lately. Yeah, but also the last 2 years have been completely crazy, because you could have bought every stock you wanted and everything moved just to the upside. So it was easy to enter in the last 2 years because everyone made money. The difficulty is to step out of the market early enough not to be caught in the bear market like we are now. And the difficult thing will to step into the market again when we see the bottom, when we are rising again, because most of the analysts are expecting dropping markets next year. We have never seen this. This is really interesting. I will show it to you. Wait a second here. So we have never seen an expectation for dropping markets like this time here. Just bring this up. Market is rising here. So you see the previous expectations from analysts, and for next year they are expecting a drop of 1.5% for S&P 500. We have never seen this in the past 20 years. So it will be interesting what next year will bring us. I don't expect the market to pull back again next year, but yeah, we haven't seen this for the past 20 years, that market analysts are so bearish. But I think because they are so bearish, then they can be surprised, especially in the mid of next year, when we will be probably at the low point of the recession, and this can be the point where the market will turn. But we will have some time until this point. Unfortunately, making higher highs, it's good for my position, of course, but I wanted to re-enter here. Yeah, it's a slow start, not really pushing fast, but it's pushing to the upside because of the good news. You see, after the news, we had these high points here, so we pushed back to this level, 11,600, right at the VWAP, Fibonacci level here. This is a bigger resistance level. Let's see if we can manage to come back a little bit in the next 5 or 10 minutes. Yeah, there's the comeback. Yeah, it's almost always doing the same thing like on the outcome of the news. First rising and then pulling back again. Hope we see the pullback again to these levels. Let's wait for them to come. Some more minutes left. Come on, pull down, pull down. 30 points. Let's bring up March future here, so that we see the price level. So you see 11,660, and this here is at 11,540 or 45. So about 115 points difference between these two expiries. I'm still watching December expiry, but both are really liquid ones, and we just have to wait for our level to come to enter the long trade. Come on, enter. Takes its time. Scalpers again rushing into here, trading long at the previous lows here. They made their 10 points now. Okay, time to push further low to the low. Come on, come on. I want to see this level. Yes, we are in the area now. Perfect. And I entered my trade, you have seen. First trade, and maybe we'll hit the second level here. Let's see if we can hit the second level. Okay, maybe not. So I will enter it right here. And I'm in the trade right now. Good. So let's see if we can see the pullback out of this area now. We were in the supporting zone. We can still trade within the supporting zone, so we have some room to trade here. But sometimes we'll just see a fast pullback here out of this area if the dip buyers are strong, because the news were strong. So let's see if dip buyers manage to get right out of this zone here, and it's looking good. They are buying in as expected. Perfect. This is what I wanted to see, and this is why you have to be patient and to wait for your levels to come. So I was able now to enter here. We can still trade within the zone, but yeah, we have seen that the bulls are there. They want to buy it back, and that's what I want to see. So yeah, just wait for the bottom to find for the market to settle, and then we can go to higher levels again. 11,500 level is here to be another support level. Just wait for the price to come. 11,500, maybe take on a little bit more if we reach this level there. So here. Almost there. Come on, take another one. There it is, my entry level. So I'm in my position I wanted to take here in this area now. Now we have to wait for the bulls to step in again. Now a lot of panic is coming into the market here. Let's look at VIX. VIX is almost trading sideways. It's really crazy because you see there's no fear in VIX. No fear at all. So no one is trading VIX to the upside. Everyone seems to be secured or thinking that this will be the bottom already. Let's look at Euro USD. Already the turning point. US dollar is gaining traction again. Low point here was 11,507 points. So perfect hit of the area. Now we need the bulls to step in and to dip by this to the upside. What is the potential, profit potential here back to the 11,600 level, so about 80 points to the upside. If you want to have a first target, if you want to day trade it, I'm in a swing trade, so I don't want to close it right now. But the next level would be here, Fibonacci level to the upside, 11,725. This was about the support level of pre-market during Asian session. And then next level would be here the 50% Fibonacci or the 38% Fibonacci at 11,917. This was the high of yesterday at 11,948 points. So this is also an important level. Maybe for tomorrow or next week, I don't know if we can manage to go this high today, but would be nice to just retest the pre-market lows here. This would cause an upside potential right now of, what is it, 1.6%. Yeah, this wouldn't be bad to have entered the position here at this low point. Let's see if we can manage to enter it. Yeah, takes some time, just being patient. When you know your entry points and your exit points, it's easy to just be patient. But if you don't know where to enter and where to exit, then you are always under tension, and that's terrible. You cannot trade under tension. You have to be calm. You have to be patient. You see, market is doing what we were expecting it to do. Perfect, perfect. Really perfect. That's why I wanted to stay live with you, that you can see this, Perfect, perfect. Yeah, nice. Are you expecting a positive day? Is the question of Scott. Yeah, I hope we won't be more negative than what we are now, because then we will be lower than this. So I don't know if we can go positive. Where did we close yesterday? Closing was here. So it will be difficult to be positive on the day. So we have a long way to the upside to be positive again. But even if it's just a flat day, so almost zero or minus 0.3%, minus 0.5%, this is also a good day because we went back up again, and then this will cause a nice candle on the day chart, and this is just what I wanted to see. So you see, we were red, right, like this, and if we manage to go back above 11,700 or just around this level, then it's looking more bullish because we will have a huge wick on the downside, and this is nice to see. It doesn't have to say that we have seen the lows. We can still see lower lows, but yeah, it's just looking better if we can hold the lows. And again, back in the support zone. Yeah, some bulls are taking out the profits already. We need to go back here to 9 EMA and 20 EMA level just to break here above the parabolic SAR dots, and then to move higher to see a change of direction, especially here in ADX. You see it's a short trend right now, but we need to change direction here to see a crossing of DI plus and DI minus, so that the purple line is above the Turkish line here, and the red line to be above 20 to have a stronger trend to the upside. But for this we will have to wait maybe 15 or 20 more minutes. So I don't want to waste your time just watching the charts. We have set our levels. I'm in the trade. You have seen it. You know my targets to the upside, depending on if you want to day trade or to swing trade. So I'm in a swing trade, so I have a lot of time. I'm sitting on my hands, just doing nothing and not watching the chart, because I'm not wasting my time. I'm doing other things I like to do up besides sitting in front of a screen. So I'm letting the rest of the market participants do their work and bringing the prices up right now. That's what I want to see. And I thank you for watching my live stream and hope you already subscribed to my channel and will be with me live together next time, and click the bell to be informed when I will be in live next time. I don't know if I will go live tomorrow because there are no major news, but maybe I will be live if we see major movements because of quadruple witching day. So just be curious if I will be live or not, but we will see us next week again for sure. And until this time, have a nice trading day and a nice start into your weekend if we don't see again tomorrow. Goodbye, see you next time.